All right, so one of the questions that I get most often is, Jen, I've got this property tax bill. Now, what do I do with it? How do I read it? So I am going to break it down for you in as simple terms as possible to help you kind of go through this whole phase with your property tax bill. So the first thing that I want to talk about is what your tax bill shows. So when you get your property tax bill, you're going to see a few things. Number one is you're going to see what's called a taxable value of your home. This is not the same as what you bought your house is. This is not the same as market value of your house. It is the taxable value of your home, right? So this is not what the market says or what you paid for it. It's going to be something different. Then you're also going to see an assessment ratio, right? So that's the percentage that your county uses as an assessment ratio. And so you're going to basically, how it works, the formula works is you get the taxable value, you multiply it by your assessed ratio, and that's where you get your tax rate from, right? That determines your assessed value. There are two different things that you can do, like for your property taxes. Then you can go to the tax assessor's office and apply for a primary residence exception or tax rate. It is lower than the normal assessed ratio, right? You're going to see a significant decrease in the taxable value that you have on your house, right, as a homeowner. Now, I want you to refer to your local county, South Carolina. So again, your tax bill is going to show three things. It's going to show the taxable value. You're going to see the assessment ratio. This is what is going to determine your taxable value. And then you're going to see the tax amount. Those are three things you're going to see on your tax bill. The tax rate is going to determine the total amount due. You get your assessed value by multiplying your tax value by the assessment ratio. And that tax assessed value is what determines what your property taxes will be. But please refer to the state of South Carolina tax assessor or to your local county tax assessor's website to get the information on that. So that's the first thing. If you disagree, look for the appeal process. There is a process for you to appeal your taxable value. Now let's talk about part two. So this is especially important if you're thinking of relocating to Charlotte and you're maybe considering living in the South Carolina suburbs and the Charlotte suburbs. You will hear some talk about, well, maybe you should look into places like Fort Mill or Clover or Lake Wylie, because Charlotte sits right along the South Carolina border. This area is particularly popular. Homeowners who make their home in South Carolina their primary residence, they can apply for a lower tax assessed ratio. So that ratio would be 4% today in 2025. Significantly lower the property taxes that you owe, right? So going from, 6% to 4% might not seem like a big deal, but just the other day, our son bought his first house in South Carolina, in Charleston, South Carolina this year. And so his tax bill came due and he was like freaking out. This thing is almost like $4,000 for this townhome that I bought. What do I do with it? And so he had not yet applied for his primary residence. We drove over to the tax assessor's office. He filled out the form. It's super easy. All you need is typically you'll need like a utility bill. You'll need your driver's license that has your address on it. You might need the paperwork from when you bought your house. But go to your local county's assessor's website and it will tell you exactly what information you need to bring with you to apply for your primary residence. So even though it doesn't seem like a big difference going from 6 to 4%, it can significantly reduce the amount of taxes, property taxes you would own on your home. So you can do this at any time. You don't have to wait to apply for your primary residence. You don't have to do it the first year you buy your house. I recommend to my clients, once they get to the closing table and we are signing on their house, you're going to get a lot of paperwork. The attorney at the time will also provide you with the application form that you will need to complete to take to the tax assessor's office to get your primary residence if this applies for you. Now, I always tell my buyers, wait 30 days because there's a lot of stuff you're doing when you're moving into your house. You're changing your driver's license, your address on your driver's license, you're changing your vehicle registration card, you're turning on utility bills, light, gas, all of the things. So that can be a little bit overwhelming for some of my buyers, but you can do it at any time. Doesn't have to be tax time. I recommend you do it within 30 to 45 days after closing your house, so it is one and done and you don't have to do it again. You do not have to apply for primary residence every year. You only do it one time. And if you sell your house and go buy a new one, every time you change your primary residence, you have to go back and reapply for the primary residence because it applies to that house, not to you. So hope that tip helps. So if you have bought, so the key takeaways for this section is number one, once you close on your house within 30 to 45 days, go to the property tax assessor's office and apply for primary residence. if the house you bought in South Carolina is your primary residence house. And the second key takeaway is also look into homestead exemption if you think that applies for you. And you don't have to do it within the first year you buy your house. It's recommended, but do it anytime so that you make sure you get your 4% property tax assessed ratio, where your tax bill goes. The tax bill is going to give you a breakdown of where all your tax dollars go. So that could be to schools, fire and emergency places, libraries and community colleges, parks and recreation. So all of us as a community, we all pay into having those services that we are benefiting from as a community. And yes, we have to pay taxes to be able to have those. So you're going to see a summary on your tax bill that's going to list your gross taxes, any credits or exemptions, and it's also going to show you a breakdown of exactly where your money goes. Finally, let's talk about how property taxes are paid. So this part confuses a lot of people. Number one, when you apply for a mortgage on your house, you will see the mortgage company or the lender will talk to you about something called an escrow account. And so that escrow account, think of it as a savings account that is part of your mortgage for home insurance and property taxes. So at the beginning of the loan, there's a lot of stuff that goes on behind the scenes, right? We are the loan officer and the underwriters. They're looking for things like estimated property taxes for the year. They're asking you to get a home insurance quote. And so they're using estimates for property taxes. So every month you are paying a mortgage payment. Let's say you're paying $4,000 a month in mortgage. And then a portion of that is going to go to your escrow account. So let's say the portion is like $200 a month, right? As part of your mortgage payment. Your mortgage company is estimating that your property taxes and your homeowner's insurance for the year will cost. If your tax bill and your home insurance together is higher than the amount you have saved in your escrow account, then guess what? Then that means that your mortgage company is going to send you a letter. The mortgage company is going to say, okay, so you have $4,000 in your escrow account, but your total property tax and homeowner's insurance combined came out to $4,200. So you have the option, Mr. Homeowner. You can pay the extra $200 because we were short for these bills, or you can add it to your mortgage payment, and then usually they'll give you some scenarios of, do you want to pay it higher? They're going to recommend that they increase the funds in your escrow account, which will impact your mortgage payment every month, right? So just make sure that you're kind of staying in touch with your mortgage company, you're staying on track with your taxes and your homeowner's insurance, and that you're getting quotes for your homeowner's insurance too. Do you have to pay your property taxes out of your escrow account, or do you have to have an escrow account? Some mortgage companies will allow you to pay things like taxes and homeowner's insurance outside of your mortgage payment. So this is good if you are somebody who wants to know that your mortgage payment is pretty much going to be fixed and you're not having to worry about how much money is in your escrow account to cover for your property taxes or your homeowner's insurance. So even though you have an escrow, you want to make sure that you're constantly checking, especially around, the first part of the year, that your mortgage company did indeed submit your property tax payment. You want to make sure that indeed happened because you are solely responsible for that. So whether you're in Charlotte or just across the border in South Carolina, understanding how your property taxes work is important. It will help you with your budgeting. It will help you with, understanding and having these conversations with your mortgage company so that you can set up your payment appropriately. You want to avoid surprises at the end of the year. I am Jennifer Ramirez, and I am a real estate licensed here in North Carolina and South Carolina. I serve the South Charlotte area and the surrounding South Carolina suburbs. And so if you are looking or have more information about how property taxes work, I suggest, I'm not a tax person. I am not a licensed CPA. I am a real estate agent who helps to guide families if they're moving here from out of state. But I would also refer you to your local tax assessor's office, your local county assessor's office. They can answer any questions you would have. So if there is a house that you're interested in and you're moving here to Charlotte, ask your real estate agent what the property taxes were for that house. That should give you an idea of what property taxes will be in that particular house. And make sure that you do your research and do your homework. If you're considering a couple of different houses or a couple of different locations, look at the property taxes and see how that impacts you, because sometimes it could make a big difference on your monthly payment and on your budget. I hope that you found this helpful. Make sure that you like and subscribe to my channel, and I will see you in the next video. Bye-bye.